Well, this is to show you the trade that I took today, how I was able to catch it. So I was able to catch two trades, both the buy and the sell. So look at this market. This is the daily time frame, okay? So this was yesterday. So when the market opened, it gapped up. Just have a look. I was able to identify this gap because the market traded down and then gapped up. And you see, we've been buying. We've been buying. So when the market gapped up, I drew the line. So let's go to the 4 hours time frame. First of all, before we go to the 4 hours time frame, look at the market. The market has been dropping, okay? Then we started to buy after these lows were taken. This low was taken with this candle, and then now we started buying. The market came, found some resistance here, but it was able to break up na break up tukapanda leo. Unaona? So I can term it this as a bullish market. So the general trend of the market is a bullish. Unaona? Market imekuwa ikipanda, forming like lower highs and higher highs. Lower highs, and I expect a higher high. So probably next week. So let's go to the 4 hours. 4 hours time frame. If you come to the 4 hours time frame, let's first go back to the daily. There is something I haven't shown you. So when the market dropped, it formed a fair value gap. The fair value gap is represented by these green lines. Look at it. You see this gap in between this candle and this candle. This is a fair value gap. I'll just draw a rectangle and then delete it to visualize it properly. This candle and this candle, they formed a fair value gap. Marked in blue. So this is a sell side imbalance, okay? So I'm just going to delete it because I don't like having too many diagrams on my charts. So, and then now let's go to the 4 hours. I want to make it really quick. Look, we have a fair value gap here. We have a fair value gap here. So this market reached for this fair value gap. Where is the daily fair value gap? This one. This is the daily fair value gap. Can you see this one? Marked in green. This is the daily fair value gap. Let me extend it. That is the daily fair value gap. One day FGV. Now look at the gap. The gap is so beautiful. There was a gap here as well. I was able to catch a trade with it, and look at this. Here's the gap. Opening gap. Guys, if you want a comprehensive video about opening gaps, kindly just DM me or just reach to me. My Instagram page is Forex_Ace_Club. Ace is ACE. So you can just reach out to me. So you see this was the opening gap. So I was able to mark it and named it 4 hours volume imbalance. It's a volume imbalance. This is because if you've been watching my video, you know, like I love using volume imbalances. So the wicks cross each other but the body do not. That's a volume imbalance. It's usually a reference point for the algorithm. So it usually acts as a magnet to attract the price. So let's go to the 60 minutes time frame. So the buy we caught was this, and the sell we caught was of this red candle. If you know me, I'm a scalper. I'm a pure scalper. So I'll directly go to the 15 minutes time frame. So in the 15 minutes time frame, I was able to draw I used this indicator to know like the session high and session low. So look at this. This is the Asian session. Then this is the London session. Okay, and now the New York has opened. New York. When New York opened during the New York London overlap, we saw this move. Okay, so during the London session, we were consolidated and then the market started to go up. If you carefully look, this is the daily fair value gap. So we were trading all through inside the daily fair value gap. Let me just make it larger. Let me make these green candles larger. No, sorry, the lines larger. So these lines represent the daily fair value gap. This line in the middle is the midpoint of the daily fair value gap. So if you take your fib and measure, the line represent 50%. So the market during the Asian it has been trading in between. Okay, so during the London at around 3:30, look this candlestick. Let's go to the 3 minutes time frame. Let's go to the lower time frame. So look at this. All this is liquidity. It's called liquidity. So I'll create a different video for what is liquidity. But basically, people consider this as a resistance. Everybody consider it as a resistance. So what happened? The market started to buy. Then during the news, it opened, then wicked up, traded above the daily fair value gap. This is the daily fair value gap. It traded above. So everybody who had put their stop loss here and they had sold was stopped out. Okay? So it's a concept, it's a liquidity concept. So can go and research more about liquidity, or you can reach out to me and I'll be able to assist you more. So look at, after the market took out all these people, we dropped. So I was able to catch the trade here. Here. After the market broke structure. Because you see, after the news, the market wicked up, we came down and broke structure. All this low were taken out, and I was able to enter here. Take profit, this area of interest. What was the area of interest? The gap. So the reason as why I took my profits from this gap, I knew this daily gap is a magnet. So this was a sure area that the market will reach. Now, if you look below it, let's go to the 15 minutes time frame. If you look below the gap, there is a fair value gap, which the market wicked towards. The market traded inside this fair value gap, it wicked, but if you look at the 15 minutes time frame, it respected it. Look at how accurate it is. It respected this volume imbalance. Okay, so this gap was respected, and once I saw the 15 minutes three candlesticks continuously respecting it, okay, the 5 minutes did not respect it, but we usually put more emphasis on the higher time frame. So once I saw it being respected by the 15, I saw a change of character. Can you see this? This candle. It's called an engulfing candle. So if you go to the lower time frame, you'll be able to see. Can you see this candlestick? That's like a market structure shift. Market structure shift. So we were able to change character, and I was able to take a buy here. So after taking the buy, where was my take profit? Above this zone, just slightly above this zone. You can take your profits here because I scalp. I scalp. So, and that's how I was able to catch this trade. Let's do a long position. So I was able to take that trade. There. So that's how I was able to catch the trade, guys. It was an easy trade. I was able to catch the sell and the buy. Now, this green area, if you remember carefully, I told you guys that this area, if the market respected this area, we could sell. This is because we had already reached the daily fair value gap. So selling from this zone is so valid. And you can see this zone is the midpoint of the fair value gap. So if the market decided to sell from this point, that would be so valid. I mean, that trade would be so valid, and it would still be a perfect setup. So, yeah.